Greetings, folks. Dan Bird here on Friday, November 22nd, end of the week, and market looked great today. Kind of flat, but there were some things that actually looked pretty good. So let's jump into it. I want to try to make this less than 30 minutes. Last night, I went way too long. So I'm going to go through this pretty quickly tonight, hopefully keep it under 30 minutes. That's my goal every day, actually. For those that are interested in participating in the website, and I'll show you how I use this tonight. I have a special for Black Friday, $24 off. It's normally $99 for an annual subscription. With this, it's $75. This is for new subscribers only, unfortunately. After spending hours on the phone with my website provider, they do not have a mechanism that extends a subscription, which is unfortunate and kind of disappointing, frankly. So it's only for new subscribers. They're actually working with me to try to do an update to their software. So we'll see if that happens, and maybe I can do something again later. But this goes till December 3rd. Just click on the link I'll show you on the main page, and just where it says coupon, put in a coupon, put in RALLY, and that'll get you the special. So let's jump over to the home page real quick. So this is the link you can click on to take advantage of that. Here's the market bias for today. It's been updated. Notice really not much has changed. It goes up, down, it's just moving sideways. So until some of the components of this get close to or start crossing over one way or the other, it's probably just going to consolidate here for a while. So we'll see what happens. But let's look at the NASDAQ. We'll look at each of the charts here. NASDAQ, again, sitting right on support. Didn't have too much of a move today. So the whole market really didn't move tremendously. S&P actually looked better. S&P had a nice gain yesterday and actually ended the day near the highs. So not a huge move, but the fact that it ended near the highs is very positive and very bullish. How about look at the Dow real quick? The Dow did really well. Actually, the Dow probably outperformed all of them. And then Bitcoin, did it hit 100,000 yet? Not quite. 99,357. The high for the day was 99,772. So almost, and it probably will get there next week, I think. But Bitcoin is on its journey to 100,000, getting there quickly. All right, so a couple of things I want to talk about as I was updating the market bias tonight. There's some things that I noticed. Some of them may not be necessarily good. So see the red squares down here? All four of these right here, they just got short-term down signals. So the columns are short-term, medium-term, and long-term. And this is what makes up the market bias overall chart over here on the right-hand side. But let's take a look at these. So transportation versus utilities, that's right here. And we'll just go down the list because it's all four of these in a row. Growth versus value, Magnificent Seven, and large caps. So we'll look at transports versus utilities. It actually got a short-term down signal today, even though it was up for the day because it had been going down so rapidly. It got a short-term down. Now this could turn back up on Monday if it keeps going higher. So that one actually doesn't look too bad. But the next one, this is growth versus value. I'm going to show you another one related to this. This is not what I like to see. So that got a short-term down signal. Whenever the market is going higher, you like to see growth leading, not value leading. Right now, if this is going down, that means value is leading. So that means there could be rotation moving out of some of these growth stocks. And there's some other things that are indicating to me that the market complexion of the market may be changing. We're going to find out here soon. Next week usually is a very bullish week, and usually the last month of the year usually is bullish as well. Sometimes that might wait till the very end, but we'll see. I talked about the Santa Claus Rally last night, if you want to watch that video. Let's go to the next one. The next one is Magnificent Seven versus the small cap. So this is big cap tech versus small caps. And you can see it went down too. It got a short-term down signal today. It's actually below the 50-day moving average. This is a relative chart. So it's one relative to the other. If it's generally moving higher, then the first one is outperforming. First one is Magnificent Seven. If it's generally moving lower, like it did right through July period, that means the second one's outperforming, the Russell 2000. Right now it's moving lower, which means the Russell 2000 is outperforming. So a lot of the large caps actually are not keeping up. They're not supporting the market like they had been. And then the last one is large cap. So large cap's got a short-term down signal today as well. Looks very similar to the Magnificent Seven, in fact. This is large cap growth versus large cap value. So this is the one that's leading that growth versus value relationship lower. And it's below the 50-day as well. That's not something that you want to see. On that note, just as a side note, the 10-year yield inversion right here also got a medium-term down signal. So it's heading back to zero. It's getting close to zero right now. It's at 0.068. So we may get another inversion if that continues. And that, again, also won't be great for the market. But let's go back. Let's go to the charts page. So these are all the things that you can access as an annual subscriber. The most important one of all those is on the More tab over here, and the risk calculator, which we use for the daily scan. So the daily scan has it as well. Either of these requires an annual subscription, and the cost, that by itself is worth the cost, just the risk calculator. But if we go to the charts page, and I want to show you the sustainability rotation chart right down here on the left-hand column, about halfway down, sustainability and rotation. So this is the S&P right here. You can see that it's been moving higher, goes up and down, but in general, it's going higher. All of the momentum indicators are above zero, so they are positive. Although the MACD has a very slight bearish divergence. Bearish divergence means when momentum in general is going down at the same time that price is going up. That means momentum is not carrying things higher. It could be running out of steam when something like this happens. Now, it's not dramatic, so this could last for quite a while, but I'd like to see it get back up to the old highs over here. But let's look at these down here. Now, consumer discretionary is the one area that's actually been pretty strong. So discretionary versus staples, that's one ratio that I like to watch. So you want discretionary, the things that we would like to buy, like TVs and cars, versus the things that we have to buy, like soap and shampoo. You want to see discretionary leading if the market's going up, and that's what's happening. It is leading. However, here's the NASDAQ versus the S&P. So technology is declining. As the market goes higher, the NASDAQ versus the S&P is going lower. Not only is it going lower, even with this little rally that we've had the last few days right here, this is still going down. The next one is technology versus the S&P, kind of similar to the NASDAQ, but this is just technology. Same thing. It's moving lower as the S&P moves higher. And then finally, growth versus value, which I showed you before, but this really illustrates it, also going lower. Growth versus value going down at the same time that the market is going up. If this continues, and if it continues into the rally period in December, and we get a nice rally on the market, the indexes, and then they move higher and even take out their previous highs, but growth versus value continues to go lower, and especially if discretionary versus staples starts to turn lower as well, then that's telling me that there is rotation going on, and Wall Street is positioning themselves for a downtrend next year. They're moving into value, which this is the same thing that happened at this period, this time right here in 2021, just before the 2022 bear market. So all the way through December, the market was moving higher consistently, hitting new highs, making all-time highs in 2021. Everybody thought it would just continue. But these sustainability ratios, in other words, is that move sustainable? They were all heading lower, just like they are right now, other than discretionary versus staples. In 21, it was heading lower too. It's the only one that's actually going up. So we have to keep watching this. If this continues through the end of December, then it is going to confirm for me that next year might look more like 2022, which was a bear market year. So not saying it's going to happen overnight, not going to happen right away. Next week is usually bullish, but it's something that we need to keep an eye on. And I will continue to watch this on this channel. So if you come back here, you'll keep up with it as well. The other one that I noticed today down here under sentiment is the put-call ratio. And I'm going to show you two of these. So the put-call ratio basically is the number of people buying puts versus calls. And if more people are buying puts, then that ratio goes up, which means it's bearish. If more are buying calls, then the ratio goes down, which means it's bullish. This one right here is this goes all the way back to 2005. So roughly 20 years. It is, let me make it a little smaller so I can get the whole thing in. Okay. So this is a little bit counterintuitive, but the best way to illustrate is if we look at the period after COVID, remember the pandemic, and after reopening, after the country reopened, everybody was out doing stuff, buying things, going to dinner, etc. So when the put-call ratio is dropping, that means traders are buying calls. They are very bullish. They're not buying puts, they're buying calls. And that's what causes this to drop. Through this whole period, from 2020 until almost the end of 2021, and remember what I said about 2021, right in December is when I saw those sustainability ratios not keeping up and indicated that 2022 was going to be a bear market. And that's what happened. Here's 2022. The market started going down in 22. And here's actually the S&P right below it. So you can see the market went down in 22. And everybody started buying puts because they thought everything was crashing. So everyone was buying puts all the way up here until we got to the bottom in 23. And the bottom for this current bull rally was right here in October of 23, which actually correlates to this peak right over here, which you can see there were way more puts than there were calls. And when that happens, that means everybody's bearish, and that's usually when the market reverses and turns around. So that's what happened back in this period. So where are we now? We have been coming down, which means there are more calls. People are buying calls, which means the market is bullish, and you can see the S&P going up. But what I did was I put two Fibonacci levels on here. There's one at the top up here. It's kind of in gray, and there's one here that's in green. So I Fibonacci, you can research that, understand what it is, but basically you can put it at the high and the low, which is what I did here. Put it at the all-time high and the all-time low, and it will tell you what the levels are in between there. And what I'm going to do is I am going to make these a little bit bigger so you can see them. So that one's gray, and this one here is green. That's not a good green. Okay, so that's green. So there they are. So I put two of them, and the reason I put two is because these are the high and the low, but there are other highs. There's a high here, and there's a low down here. So I put another one right there. And look what happens when you compare the levels at the 38% level. Notice that both of these coincide right there. And this is a daily chart, but it's 20 years. So it will take some time to move down. If this continues to move down, which means it's bullish, and we get right there to January, which is right about where that level is, that's where things might reverse and start to go back up again. So if they reverse, then everyone starts to become bearish and the market goes down. So this vertical pink line is right about at the January point, right there. So that's what we want to watch. And I'll continue to come back to this and watch this again. You can see right here where we hit the bottom right there. So there's a red line, that's the top. So if this is the bottom, then the S&P is at a top. If this is a top, the S&P is at a bottom. So they're counterintuitive. So it hit a bearish indicator right here, and the market just went sideways all the way over here until we got a bullish one. That happened back here as well. Here's where the secular bear ended in 2013 and where the secular bull began. The other thing to notice is the VIX. See, the VIX through this whole period, this whole bearish period right here, the VIX stayed above 20. Right now, the VIX is below 17, and that's good. Below 17 means hopefully we will have continued bullishness. But if this starts heading higher and this starts heading higher, at the same time, the S&P will start heading lower. That is an indication to me, in addition to the sustainability ratios that I just talked about, that the market might be setting up for a cyclical bear in 25. We'll see if that happens. Doesn't mean it will happen, just means it could happen. All right, so that's the overview of the market. Let's take a look at our worksheet and see where we are for the daily scan. Daily scan, I did add another one, and I'm going to talk about this today. So these are the ones we added yesterday. By the way, notice SoundHound. So SoundHound was on the list yesterday. There were 3 of them on the list yesterday, these 3 right here. And I've moved stops up on a number of these already. I haven't moved the SoundHound one up, but I'm going to do that also today. And I added a new one, Lumen. So Lumen actually hit the scan, and it hit the 52-week high reversal scan. So that's the reason I put it on there. If we look at the chart, and I actually added it earlier in the day, so you can see it added it at 8:25. I actually should have waited till the end of the day. And so this is a good way to learn, to understand what's going on. So here it is. Let's look at the 10-minute chart. All right, so this is the beginning of the day right here. That's where we added it. Actually, we added it at about 8:25, about right here. And then it went sideways, and then from 1 o'clock until the end of the day, it went down. So it came back almost to where it opened. So that's not a good thing. Now, the hope is, and it went down, by the way, at the end of the day on huge volume too, which is also not a good thing. So the hope is that it will turn around and go back up. However, originally, let me go back to Lumen. The stop I put a little lower down, but I've moved it up at the end of the day because of what I noticed here. You can see the candle over here, barely, but it's basically a shooting star doji. So it went up and it came all the way back to the open. That is a bearish reversing candle. So this one, we might get stopped out of this one right away. So originally the stop was down here where the bottom of that is. I'll actually draw that in for you. So the original stop was right down below where those lows are, right down there. And at the end of the day today, I moved it up because of that. So this one could get stopped out, and it'll actually be a good lesson if it does. I hope it doesn't, but if it does, it'll be a good lesson, because the point of all this is not to be right, is to try to make money. So we'll see what happens. You can see if it does get hit, then it's almost an 8% loss. Now, I moved a few other ones up today as well. I moved Oracle up, so it is now has a gain to 183. I moved Viper up. It now is basically a little above break even, so it's actually green. And SoundHound did great. So let's take a look at SoundHound. So this is, if you watched last night, you saw how I found this one using the scans and got into it right here. And today it blew through resistance. And I mentioned yesterday that it's also on the short squeeze list, and that shorts usually start to cover when it gets above resistance. And that's what happened today. Got above resistance. The volume, let's look at the volume, huge volume. So there's today's volume. There's yesterday. It already was indicating it was going higher. Today's volume was much bigger. And that's what you like to see on a short squeeze. You like to see volume really ramping up like this and have it take out the previous resistance high. So in just one day, we were able to move the stop up to basically a 3% gain if it gets stopped out. And so I moved Viper up as well. Look at Viper. This is where the stop started down here, but it had a really nice day today as well. So move the stop up on Viper just above the break-even point. So we can't lose money on this one. Be nice just to watch it move higher. Now, what I did, a couple of things I did on the worksheet. I haven't loaded this up to the website yet, but it is on the website, by the way, for any annual subscriber that wants to get access to it. You just go to the portfolios page, and right in the upper left it says paper trade worksheet. Just click on that and it will download the Excel file for you. And by the way, the Excel file includes the risk calculator, which is what I use. So you can see here's Lumen over here. This is what I use to figure out how many shares to buy. I put in the account value. In this case, this is what we're working with. The average true range, which you can find on any chart, but if you put the symbol in and just click on this little button here, it brings up FinViz. And I mean, you can see also in FinViz what that candle today looks like. That's a reversing candle. So we might be out of that pretty quickly. Interestingly, where they put their support line right there is probably, it's 755. So I actually moved my stop up to 760. So it's pretty close to what they're saying. But right down here on the right, the ATR is 61 cents. So that indicates volatility. So I put the ATR in there. I put in the price, 825. It's what we actually bought it at. And then I put in the stop. The original stop was 735. That has now been moved to 760. It still would be 840 shares. So this lets you know how many shares you can buy. I put in a default of 7% on the left-hand side. On the yellow side, that's what Investors Business Daily likes to use. But I like to use the chart. So in this case, I put it at 760. That's a little below 8% if that executes. So what this does is it calculates the 1% rule. So never risk more than 1% on any one trade. This is the account rule, which says never, if the company that you bought stock in goes out of business tomorrow and ceases to exist, this is the amount you will lose out of your portfolio. In this case, it's 7%. 7% of 100,000 gives us 14 trades. So that's the most that we can have. And then the volatility rule uses the ATR and determines volatility, and then it calculates the number of shares. So you can see if I was only using the 1%, I could have bought 1,500 shares. Oops. Yeah, it actually will explain what the ATR is. Or if I only used the account rule, I can buy 848, and the volatility rule was pretty close to the account rule. So it said I can buy 840. So that's how I come up with the number of shares to buy. And we do that for every single one of these all the way down. We've got 2 more slots left, which is rare, by the way. Usually something gets stopped out before this happened, before now, but nothing has been stopped out yet. If we fill this up and we find a good one that we want to get into, then we'll figure out which one of these to get rid of to add a better one to it. Just like building your football team for fantasy football. All right, so that's where we are. Kava, I also moved the stop up on Kava today too. It's actually been looking pretty, actually it did look pretty good. It came back too at the end of the day. So another reason, a good reason to move the stop up. So that got moved up today as well. I didn't even look at that until just now. So Kava actually would be a little less than a 3% loss if it gets hit. Now, all of these together, I put it down here, the current risk. So if every single one of these got stopped out, if the whole market just started crashing tomorrow and they all started going down, some of them would be stopped out with a gain, some with a loss, and our total risk in this portfolio right now is 8.5%. So what we want is for these all to be turning green. And if they start to look shaky, then we'll start to move the stops up, lower our risk and protect our profits. The other thing that I did was I put in a little indicator if we're within 5 days of earnings. So let's say earnings was for DocuSign was on Monday, which is 11/25. So let's say earnings was 11/25. Notice it lights up over here in red. That tells me earnings is only within 5 days away, and I need to decide whether I want to stay in that or not. So that's the other thing I added to this, which I'll load this whole thing up later. So that's where we are right now. I'll just go through each of these real quick. DocuSign looks great. I'm not moving the stop up because I want this to go up and pull back, and then I'll move the stop up. Gilead is a new one, actually just added yesterday. Here's Intel, just moving sideways. Lumen added today, but I'm not liking it. Oracle, hanging in there, just staying. SoundHound is great. SoundHound, it hit two of our scans yesterday. So, and one of them was the short squeeze scan. So this one really looks good. So we are actually in the money on that right now. Hopefully it'll keep moving higher. Viper Energy looks really good today. So energy stocks went up. Here's Vertiv, just moving sideways, consolidating. WGS had a great day. I was a little worried about it yesterday and actually at the beginning of the day today, but it looks really good right now. So we might end up moving the stop up on that one if it keeps going. ADMA just going sideways. Kava looked good earlier. Doesn't look so great right now, but Kava's a good company. They had great earnings back here. So I'm kind of hoping we can hang in with that one. Coherent, again, just moving sideways, and back to DocuSign. So that's the status of all those. If let's see here, if I go back just real quick and look at the market, you can see the Dow. It was the big gainer today. Dow did really well. The VIX came down, which is good. All these actually look pretty good. Bonds, 10-year perked up a little bit, but not much. Commodities, gold came up a little bit today. So one and a third percent. Silver did a little bit better than gold. And then crypto, of course, Bitcoin, another $631 today, getting close to 100,000. If we go down here, consumer discretionary, number one sector. You can see the little chart. It looks really good. It's heading up to take out that previous high. Communication services and technology are the two aggressive sectors. They're at the bottom, but so is utilities, which is the most defensive. But look at the industry groups. Discretionary is XLY. There's 1, 2, 3, 4, 5, 6. 6 of the 10 are in consumer discretionary. That's why it is leading. That is the one positive for the whole market today. The consumer discretionary continues to lead and actually leading with authority. So it just continues to go up. Renewable energy too today actually did fairly well, but it looks actually pretty bad. But had a good day today, but overall doesn't look too good. And then our top 10 combined list, look at the number one stock. That's the one right on the top. Of about 230 names in this list, SoundHound is number one. All of these stocks have been in the top 10. This one looks great. It's $1,700 stock. Redwire, Bit Digital, that's trying to recover. Here's WGS. It's the other one that's on our list. So two out of the top 10 are on the list right now. This is an energy stock looking really good. It's a little bit too extended to get in right now. I like for these to pull back. So this one may end up on our screen or on a scan eventually. So if this one pulls back from those levels, then we might add it to the list. So that's how things look. This is a great list of stocks to pick from. It can be found on the website on the charts page. Down at the bottom of the charts page, these are the top 10. These get updated every weekend. I usually do it on Saturday morning. So 3 different criteria for identifying the top 10. Investors Business Daily, stocks that have beat both earnings and revenues, and stocks that have outperformed their peers by 10% or more, and have outperformed the S&P by 5% or more. That's the only way they can make this list. Anything with an asterisk is brand new for the week, and they all have charts on them. So notice that Lumen is in this list, and it's also down here in number 1 in the top 10 small cap list. So Lumen is actually it's been on the top 10 list over and over again. So you can see how it just keeps hitting highs over and over again. And now it's pulled back, which is what we want. And now it's back above it was above the 21 day. Let's see if it still is. 788 and the 21 is 790. So it's just sitting right on it. So we actually want to see that move a little higher. Volume is light down here. So we'll see that we could get stopped out. It'll be a good lesson if we do. The idea is not to be right. The idea is to make money. And on that note, I'm going to very quickly show you the ones that did get stopped out down here. We'll start with Uber. Uber, the mistake was we bought it 2 days before earnings. They missed earnings, so we got stopped. Even though the stop was up here at 77, it gapped down, so the stop didn't help. It turned into a market order and executed down here. So we took a loss on that one. But look what's happened since then. It's still down. In fact, if you had done a stop limit order, like I talked about yesterday or the day before, and we put the stop limit order back up here at 77 also, it would have gone down here and not executed. It would have waited for it to come back to 77 before it executed, and it never did. So that's the reason I don't like stop limit orders, because you could end up getting stuck with something way lower than you could have. You could have gotten out. So I'd rather just get out and find something else. There's so many good stocks out there. There's no reason to get married to one particular stock. There's so many others that you can play with. So that's Uber. Here's Sentinel. There's where we bought it. Here's where we get stopped out just 2 days later, and now it's lower than where we were stopped. Here's WLDN. Bought it there, stopped out 2 days later. It's lower than where we were stopped. Here's Raytheon. Bought it here, stopped out 4 days later. It's now right back to where we got stopped out, right back to the same place, but hitting the 50-day moving average, and who knows if it'll get rejected there or not. So Powell, I'm sure people have been following Powell. It had a huge run. We got in right here, ran all the way up. We moved our stop up so that we were making money. And the hope is that it would pull back and then start moving higher, but it pulled back right through the stop. It did move higher and then went down again, and now it's right back to where the stop was. Will it continue higher? Who knows? I don't know. This might appear on our scan again later. and we might get back in it again later. Now this right here was earnings. This gap right there was earnings. So it's trying to work through that earnings. But again, the reason I'm showing this is because it's better to just be stopped out. You can see Powell was a 13% gain, and Sentinel was almost a 2% gain. And then finally Google, and a number of the big cap tech stocks are looking like this. So Google, we got in right there. We got stopped out over here. Again, the plan, the method is to let it go up, pull back, and then move up again and move the stop to where the recovery was. But in this case, it went through, we get stopped out right there, and now it's way down here. So the point of all this is, how many times have you bought a stock expecting it to move up? It does move up, so you're really happy. You don't use stops, it keeps moving up, and all of a sudden it goes down. And then it starts to recover, and you're like, oh, phew, I guess I dodged a bullet on that one, and then it drops again. And now it's so far down here from where you've originally bought it that you're so much in the hole that you're like, well, now what do I do? Do I just keep it, or do I sell here? If I sell here, am I selling at the bottom and it's going to recover and leave me behind? I just don't like having to deal with all that. Put a stop in and just get stopped out. You can take your money, just like I'm showing you right here. You can take the money from all of these that got stopped out and put it into ones up here that keep moving higher. That's the goal. That's the way to do it. Rather than just looking at your account every day and seeing nothing but red on there, just get rid of them. Get all that red off the screen. Now, one that we didn't get in is Affirm. And so right here is where it hit the scan. Didn't get in because it was too close to earnings, had great earnings, and just kept going higher. Now it has a shooting star candle, so it probably is going to reverse and come down. So we might have a chance to get in again if it comes down to the 21-day. We'll see. But anyway, that's the lesson for tonight. Hope everyone has a great weekend. Let me know what your thoughts are. Please like and subscribe. And as always, I keep forgetting to do the disclaimer. Some folks said, I actually have something right on my screen to do the disclaimer, but I am not a financial planner. I can't tell you what to buy, when to buy it. I don't know your trading style. This is not for recommendations. It's for educational purposes only. And if you do decide to engage with a financial advisor, I recommend that you go to the site, make sure that they're reputable. So sorry I get that in at the end. I'm really trying to do it at the beginning, but keep forgetting. Maybe I should just leave this up right from the start. That might be the way to do it. Anyway, thanks everyone. Have a great weekend. Next week is usually a bullish week. I talked about small caps last night, and how Tuesday is when they start their run into the end of the year. And look what small caps did today. Remember last night I talked about this, and I talked about TNA, which is the triple leveraged Russell. I did not add it to our worksheet. However, I did buy it for my own portfolio, my other account. And here's what it looks like. TNA was up 5% today. So this is where it hit this. This is where I found it actually would have hit the screen back here. I added it right here and had a great day today. So I actually added it today. I added it right in the beginning. So I had a great day today. Everything looks great. The momentum indicators are moving higher. Everything's looking like it's preparing for Tuesday for that blast off. And that's what I'm going to call tonight's episode, blast off for the small caps, because I think they are already beginning to blast off. So folks that have asked me before what I think about small caps and what they might be doing, I think this is it. I think they're getting ready to go. It's closed this gap right here. It needs to take out this previous high. Probably is going to hit resistance right through there. Might pull back a little bit or go sideways. But then I think next week is going to start the run into the end of the year. So that's it for small caps. That's it for me. Have a great weekend, and I will talk to you again on Monday. Thanks for watching.